Hello, Warriors. How's everyone doing? Hugo, Buongiorno, Calamina, Brock, how are you? Good morning, Ryan. How you doing, buddy?
Morning, Dale. You okay?
Yeah, I'm doing pretty good. In fact, glad you're here. I have a couple of things to ask you. There were a couple pretty important holds yesterday. First one being gold. So I saw this as, the bull's last stand, the Alamo here.
Yeah.
And so far we've held here. And yen yesterday must have happened. I bought it against the wedge line right here. Well, it still amazes me after all these years how I could draw a line weeks, months before, and there's actually some reaction to it. So this is what the yen held. And if it takes it out, a lot of stories change.
Yeah, bang on that 1250 level. 1253, I think the low was.
Yeah, right there. And which one's going to give way first? Are they both? I would lean more towards another high coming in the yen and an eventual breakdown in the gold. And, I was looking at this gold, and if we have something like equality from here, have a move like this from here, it gives you 1565, and 1565 is a fib extension of something right here. So that's what I think could happen.
Yeah.
And what? Also, what do you think of this, Ryan? Does this show a willingness now that people are willing to step in on weakness? And euro happened to all the currencies. I guess this was after a Powell remark. Willing buyers coming in here, real nice recovery. That showed that we might be getting close to a low because buyers are starting to come in to accumulate. I still think we have new lows. I'm still looking for 97.50 to 98 in the Dixie. So we'll see. Hello, Monica, Ingmar. Your reaction to some of the events from yesterday, plus it's a double header. We get Powell again today.
Yeah, the Euros are funny. Well, yesterday's move was all over. They've had many views.
You're breaking up again.
Oh, here we go, breaking up.
Yeah, you need to restart your router like every day or something. I don't know what the problem is.
I've just got 50 meg download and 20 meg upload.
Yeah, I don't know. Maybe you should be plugging in your machine to the router directly. It's not.
I've got it. Yeah, I've got it on Wi-Fi and Ethernet, both connected.
Wow, that's
maybe turn off the Wi-Fi if you're plugged in on Ethernet. Maybe turn off the Wi-Fi. Maybe there's some kind of issue there. I don't know. Actually, I don't know.
Well, yeah,
good guesses.
That sounds like a great guess. So let's let Ryan do his thing, and let's talk through yesterday. And good morning, guys. By the way,
good morning, Blake.
Yeah, Powell was. Hawkish, what do you think about that, Dale? I mean, he was hawkish, man. Wait a second. Did we really just ditch the word transitory? And I got to tell you, yesterday was an absolute crap show in the market. It was the end of month. We had these Powell comments where I didn't think he was going to say something like that. And we saw a lot of volatility. And I'm going to tell you just how I handled it. And then, Dale, I want to go back to, you were asking Ryan a couple questions. I didn't catch the questions, but we can talk about that here in a second. I just want to say that yesterday, it looked like the dollar was going to sell off, right? So we were going into month end, looked like the dollar was selling off. Citi had, I think they said there was going to be some dollar demand at the end of the month or something like that. I forget. But anyway, the dollar looked kind of weak. And, you had the Kiwi trading up towards its highs, the Aussie trading up towards its highs. I actually had longs in the Kiwi. I think I was long the sterling at the time. I was short like dollar CAD. I forget what it was. Anyway, I was short a bunch of dollars, thinking, okay, Citi's going to be wrong again into the end of month. And here, the dollar was just selling off, and then all of a sudden Powell came out, and these comments really caught me off guard. They stopped me out of everything. I was down for the day yesterday, and I'd given back all my gains from Monday. So like everything that I made like Sunday, Monday was gone. It was like poof, it was like, yeah, I just got stopped out of everything. And I was like, holy crap. I'm like, he just removed he said, we're going to retire the term transitory, which I'm like, oh, bozo, you shouldn't have been using that word in the first place. And then you guys know our feelings here regarding transitory. It's like, it's not transitory. It just, it's not going to be as strong a pressure, but we're going to still have higher inflationary and price pressures are going to stay, persistent. Just, the rate of change of inflation is going to be transitory, right? I mean, there's a difference between the two. Anyway, regardless, he did that, and then the dollar absolutely took off like a bat out of hell. And then by the end of the day, and just so you guys know, I actually re-entered into dollar short positions, basically getting long the euro. I totally forgot I had a euro bid out at like 112.50 yesterday, and then I ended up getting short dollars again and made back all my losses from earlier in the day by the end of the day. So what was really interesting is that I had an absolute disaster of a day, even though I ended up break even for the session, which I was very happy about after the initial move. But let's talk a little bit about why the market reacted the way it reacted. Why did the dollar? And I'm going to ask you, Stelios, and I'm sorry, Dale, we will go back to your earlier comment.
It's okay.
But I want to go back to Stelios really quick while we're waiting on Ryan. Ryan, whenever you think you're back, just let us know. Why do you think the dollar sold off yesterday after those comments?
That's a very good question.
Because I have my opinions, so I'll give you my opinions afterwards. But yeah, why did that happen?
I don't have a specific answer. All I can say is I'm looking at Fed Fund futures, and they're pricing a full hike by July next year. I think that is quite aggressive because remember, we're talking about finishing taper by the first half of next year. Yes, Powell said yesterday that they might bring it forward, but really I think it's at all us. So the market kind of, I think, realizes that there's only so much the Fed they can do. They want to tighten. They really, they want to tell us, yes, we're going to be tapering and tightening and all that. But really, what can they actually do? Last time they tried tapering in 2018, we saw what happened. So the market, I think, is still a little bit unsure about how much the Fed can do compared to what they're telling us that they're going to do. But I don't have a better answer. So I don't know what you think.
My opinion is really that the dollar really strengthened yesterday following Powell's comments, even though, weakened yesterday following Powell's comments, even though they were very hawkish. And because I think the market knew, actually, because I have to go back and say that everybody, I don't want to say everybody, but a lot of people that I've been interviewing in the markets over the course of the last, let's just call it 2 months or so, has told me the same thing. Like, we're expecting the Fed to, taper quicker, faster. So for him to say, okay, we're really ditching the transitory word, and I think we need to retire that word, I think is his specific wording he used. It's like, well, of course you were supposed to, that word never even made sense in the first place. So I think everybody looked past that and said, yeah, we know what we're dealing with. And so we got that, we saw, the dollar actually weaken following that. Now, I think the dollar's mid-range at this point, and what we are waiting for today is we're waiting for, the jobs report, or the ADP report here in the next 5 minutes. But yesterday was kind of messy, and I took all my dollar shorts off Well, not all of them. I took a lot of my dollar shorts off. But I picked up the Aussie dollar below 71 cents yesterday, and I sold some of it at 71.62 last night in Asia as we were approaching that resistance. And I'll kind of show you guys what I was doing there. But here, let's go over to, because we're going to go into live analysis anyways. But I wanted to go back to Dale here just a second, but I want to show you guys. So with the Aussie dollar, you know, when we pushed below the support, I picked up the Aussie around 71 cents because we really pivoted off this 38% longer term. You guys know that I feel this is generational, right? I've said this many a times over the last couple months here on the free F.A.C.E webinar. This is a generational low. We shouldn't see anywhere close to that low, probably, you know, for the next 10 or 20 years. That's when, you know, generational, I talk generational and traders like 20 years is a generationally, you know, you kind of work through one generation of traders in about 20 years. Anyway, we shouldn't see that level again. So we came back to the 38% retracement. I've been looking to be a buyer down here for a long time. So given the fact that we got really close to the 38% retracement, you know, I picked up some below 70 cents. I sold it last night here at 71.65. I sold half of it. I still have half of it right now. And I want to add, and I'll add down here. I'll add on a breakout above. I have no problem doing either or. So that's how I'm kind of approaching the Aussie. But Dale, going back really quick, what was your comment to Ryan earlier?
Well, I was showing both the gold and USD yen held important support lines. And then also the fact that the euro came back after that comment, I think shows a willingness that the market's coming in and they're willing to start accumulating and buying breaks. Even though this isn't the low, I don't think it's a low yet. It shows like a little different stance that the market might be taking, that they're starting to, they'll buy breaks now.
Yeah, you know what's interesting? I think because volatility is picking up, and I'm a firm believer, Dale and Stelios, that you know, volatility is coming, and you're seeing it in currencies. We're seeing a lot of good volatility now being produced in currencies, and I think that people are willing to take those, you know, those breakout shots, right? But look at gold. You know, you talk about pretty key support in gold. This is where gold really gets bearish, and I know we've talked about the underperformance in gold, but you know, we get below 1770.
That's what I showed, that line.
Yeah, I wouldn't want to be long if we drop below that. If we drop below that, that's obviously a you know, very, very bullish signal for the dollar. We got a couple of minutes before ADP. Do you think ADP matters right now, Stelios?
Probably not as much as NFP, that's for sure. But yeah, people are looking at it, so it's gonna matter. But really, it's about Friday.
Yeah, you know, I think ADP really does matter. And one of the things that we're gonna have to, you know, pay pretty close attention to is, you know, as these inflationary pressures stay relevant and prevalent, I think it's going to be important to see, you know, how the you know, we need to make sure that the jobs picture still looks good. And you know, so the market is looking for, let me just confirm here, we're looking for 525,000. I know we don't have a forecast here, but that's what that's what is being reported elsewhere. Ryan, are you back?
Yeah, I'm here. Can you hear me?
Okay. Hey, you sound better.
Good.
Yeah, you sound a little bit better today. Oh, what day am I? Let me just move here.
Dale gave me the virus back.
On investing.com, we've got 525. Let's go over to a 5-minute chart of the dollar yen. By the way, key support for the dollar yen is at 112.50, and that's a big breakout point, and we respected it yesterday.
Right.
So you got to be a little careful being short dollar yen while we're above 112.50. I'll show you that in a minute, but let's see what happens with this data. If you guys get it before I do, please let me know.
534.
Okay.
So that's in line. Yeah.
Yeah. Okay. Well, you know, we're probably not going to see a whole lot of reaction here. I would assume. But going over to the and that, by the way, that data flash is part of your subscription with Forex Analytix. It's right here, so you can get the breaking news as it comes out.
I think the jobs numbers at the moment are a bit similar to what we've had before. As long as they're not collapsing, the market's going to be happy. As long as there's no problems. If even if we get a 200k print, it's still a plus number. So
that makes
unless
sense.
we start seeing some bad stuff, the market's not going to give a monkeys really.
Okay. Well, it's I'm going to go back real quick, Ryan, since you're back here. I'm going to ask you this question. Now, this is the dollar yen, just so everybody can see. There's two big levels, and Mark Chandler from Bannockburn Global Forex, you guys know him. If you read his, this is his piece on tradersummit.net. You can read, what he has to say here. He when I interviewed him a couple of months ago, he's like, yeah, the dollar yen, we've gone from one range to another, so the new range that's formed right now is, 112.50 to 115. So we have the 115 upper end of the range, which you could actually say now is 115.50. Support being 112.50. Remember, that was a breakout point from the 2019 highs, 2020 highs. So, the dip yesterday was bought as we got really close to 112.50 yesterday. So expect dollar yen to be well supported above 112.50. All right. So, but I'm going to go back to you, Ryan, really quick. Let's talk about yesterday. Yesterday was a disaster move for the dollar. The dollar was getting, pounded into month end. Powell, raised his voice. He said some pretty hawkish things. And the dollar turned around, rallied, and then by the end of the day, gave up most of its gains again. So why do you think the dollar reversed yesterday following, in your view, as a European in the UK with horrible internet? What's your opinion about why the dollar reversed yesterday?
Honestly, I don't know. The yesterday threw me. We got the three themes running. We've got obviously the end of month, of which just could have been, added to by everything else going on. We've got the virus stuff going on, lockdowns happening, all that sort of stuff. And then obviously in the middle of that, right around the fix, is Powell talking about, inflation targets met, the AIT, they're there. Transitory's out the window. That's more just a word than a policy move, if you know what I mean. He's had enough of that word transitory, even though it was the blooming central bankers that started transitory in the first place.
Right.
But they're all basically thrown in the towel. So as I say, it was a bit of a mix. We had the end of month coming in, and the dollar was getting nailed. Powell changed that really quickly. But he didn't, if you needed to sell dollars for end of month and suddenly Powell's giving you better levels, what are you going to do? You're going to get rid of the rest of it at a much better level than you were the hour before. Right. So I hate these moves like this because it throws me in the short term, in the intraday picture, what's going on. So take a wider view. Let's look at the week before we got the Omicron stuff. What's happened now? Where are we in something like euro dollar? We're pretty much where we were last week. So you know what it did for me yesterday? And this is the euro. You guys can see what happened. Like I said, I was short dollars going into month end. Powell's comments came out. I was long sterling, got stopped out. I was long Kiwi, got stopped out. I was short loonie, got stopped out, on that move. And and Ryan, I don't know if you were listening or maybe replugging in your router, but what happened is I ended up making all that back that I lost on getting stopped out when I got long the euro on a bid here at 112.50. I forgot I actually had that bid in. It was actually expiring yesterday afternoon. So because I put it in like Sunday, I think, or early Monday morning. And I said, for the week, I just wanted to, any dip back to 112.50, I want to be long. Yeah. So when I got hit on the euro, I realized that the dollar had been at so many key
levels of resistance for so many currencies that it really forged a bottom in the euro and a top in the dollar. But what's more important about yesterday's price action, in my opinion, and I'm going to show you right here, is if you zoom out a little bit, and you take the last leg lower in the euro. So this is the last full leg lower that we saw, from the end of October, to the lows in November. So that month. Now, if you see this red line here, it was harder to see because it was just hidden behind that 38% retracement. You can see now, this is a really key level of resistance that comes in at 113, 113.75. That's the 38% retracement. It is the level that I will be looking for on a breakout, because I still assume the dollar is going to break higher and then reverse around 115, and that's where I really want to be aggressively short the euro. But I still think that this is possible. Now, you might see it here, but it's better seen in the dollar index that you got a nice little head and shoulder pattern. So same thing with this is just the exact opposite chart. I'm looking for a head and shoulder pattern in the dollar index, move back down to 94.50 and a bounce from there. And this is going to play into this big channel that we've been playing in. That's how I'm looking at the dollar right now. That's how I see it. And like I said, the important thing about yesterday is the euro really formed its really key resistance. So I know that a daily close above 113.75, you have to be bullish the euro and bearish the dollar. Period. End of story. There's no if and or buts about it based on price action yesterday. Go ahead.
And I agree. And I also agree what Dale said. It also confirmed that, perhaps now we have seen a bottom, because we had the lows last week, down, dipping under 112. And then this week, we can't, even with the big news, we can't get close to that. 1250 or whatever it was yesterday. And the buyers have come back in. So, that's all the signs of a bottom. So again, talking like we may have a new fresh range in dollar yen. We've got a marker here. We've got this 1370, 1380 that you've got up there. There's a ton into a bit higher up, 40. There's lots of steps in the way. Yep. But now we've got the range. Your 1370, 80 on the top, and down below your 1250 is one, but your 1200 is going to be another. And if we come down, and what I see is more important about that low down towards the 112s you got there is the secondary low. So after we made that low, we made a low that's just a step higher. That's the key bit, because that shows me that that's a potential bottom. Because you know what it's like if you have that bounce off that first low, but then you have another low and it's a few pips more than the prior one, your trend's not over. And that's what we've seen throughout the last month in this whole move down. We've never seen the price, get up and stay up and find a support level. It's broken each support level it's made. This one, it hasn't. It made a higher low, and then we've gone on from there. So we've got the marker, if above 1370, 80, you want to be, you don't really want to be short, and you don't want to be long if it breaks below 112 again.
Yeah. And the 112 is so important. And one of the reasons, the major reason why I bought the euro below 112 last week was this, 13-year trend line. Everybody should know it. If you've been here every day, or you've listened to the week ahead videos that we produce every weekend for you here, this is the 13-year trend line in the euro dollar. And everybody should know that's why I was buying below 112 last week. And, it's the same trend line that I've been playing off of this week with the euro yen at 128, right? This is the same multi-decade, over 10-year trend line that's also being tested. So that just shows you, and especially when you're looking at the euro dollar and the euro yen, which, by the way, you talk to any currency trader that, trades professionally on any trade desk, they'll tell you the exact same thing. Euro, yen, those are some of the most actively, if not, top 5 or 6 most actively traded currencies in the FX market. Those support levels matter now. And while we're above let's just call it 128 in the euro yen. And while we're above, 113 or 112 in the euro dollar, or, we can call this 127.50 really is where that, trend line, you have to give it, plus or minus 30, 40 pips. Somewhere down here around 127.50, all huge levels that you have to very much respect. And Jay says, euro sterling, the euro sterling is another one of those currencies that I believe is a really, important currency, especially when you're trading the euro. But you can see, just so you guys are all, if you're familiar with what the euro sterling looks like, Ryan was picking it up below 84 pence a couple weeks back, which was a good pickup. I know you're net short here.
Yeah, I'm still long a bit of that as well.
Oh, are you still long a bit? God,
Yeah.
That's I tell you, I really, really envy you guys that are non-Americans because as an American here in the USA, when we trade, we can't have multiple positions on different sides. So I can't be long euro sterling and short euro sterling at the same time. Because of FIFO
Do you not have
rules.
2 accounts on different brokers?
You can. I mean, yes, it's just it's easier to see, obviously, when it's on one screen.
True.
I it's much easier because I've done it. I've done it both ways. I actually do it both ways.
Oh, you do it both ways. Good.
Both ways.
Yes.
Does he sell?
I swing. So I trade. I mean, anyway, but no, jokes aside, though, it's so much easier when it's on the same screen, because prior to those FIFO rules being implemented here in the US, what was that, 10, 12, 13, I forget what it was, years ago, we used to actually have all of our positions on one screen like you guys do. Then we enacted these FIFO rules, so you have to get 2 accounts. I can actually be short sterling, long sterling in 2 different accounts that I have on my computer right now, but it's a pain in the ass, and then you don't pay attention to it. It's you lose track,
Yeah, I get it.
it's harder. But yeah, anyway, going back to what we were talking about here, we are just below the 200-day moving average. We are still trending lower in the euro sterling, but we're kind of mid-range. So I'm not giving it as much thought in the euro sterling right now because, we get close at 84 pence. I'm more interested. We're up towards 86 pence. I'm more interested right now. It's kind of, we're mid-range. So at 85 pence, which I'm not so interested. Okay. We got just a few minutes, and I just want to reiterate, kind of what Ryan was saying. And also, let's talk sterling since we're talking sterling really quick. I picked up, the cable last night or yesterday, close to 132. I bought it down here, like 132 and 50. I forget what. I have to go back and look. I do think it's a bullish breakout above 133.75. You can see this little breakdown point here and see how we're probing above it. We are in a bearish trend. You can see these little circles and ovals that I have on here because this is what my daily analysis look like for literally weeks. I keep telling people, hey, we're in a bearish trend. This is our analysis here. This is a bearish trend. We do this analysis every morning with our Forex Analytix subscribers exclusively. But I tell people, hey, we're in a bearish trend, but that doesn't mean I have to trade short. After a month and a half of almost straight down and being on the short side most of this, I will start trading counter trend. And just if you're trading counter trend, you just take smaller positions. So as I go long the sterling, I'll be in much smaller positions doing that because I know I'm fighting a uphill battle here, or in this case, fighting a downtrend. But the fact of the matter is we get above 133.70, we're probably going to squeeze back to 135, and that would kind of fall into the same line as the euro, breaking above 113.70, 113.80, and making its way back to 115. So these two moves will go hand in hand, in my opinion, for the most part. So it's just something that I think you should pay attention to. We are continuously making lower highs and lower lows, so the bearish trend is still intact, and that's something that we shouldn't disregard. Now, there's been a lot of talk Ryan, in the UK with some of the central bankers. I think we shouldn't get into it right now because we're going to work into Dale's interview. But how are you feeling about the sterling where we're currently at?
Cable, I've not traded cable for a while. I think it's a bit messy. Yeah, I'm looking at the wider view. If we get under 132, then I see we get a move down to 130. That's potentially where I'll be very interested in picking that up. As you know, as we just said, I prefer to play it through other pairs, and especially against the euro. I think that the central bank divergence trade is much cleaner there than trying to match the BOE to the Fed.
Yeah.
Purely because of the vol we got yesterday. It's been up and down, up and down, up and down. It's not. We've got a wider trend in play, but intraday it's just all over the place, and that's not what I like. I like my stuff nice and calm where I can get it.
Yeah, well, the good news is, like, for us, we can really say, I can say this with all confidence for myself. A daily close above like 133.75, that should allow for a squeeze. You can see all the probes, they get rejected, but you get a daily close above there, then we're talking. So, something for you guys to keep an eye on. Now, remember, don't forget to try out Forex Analytix. It's only $1 for 10 days. Make sure you try us out, download the mobile app, get involved in our chat rooms, which I would say is here's our chat room. This is the most active chat room you're going to find because I've been up for an hour, and this is when I got up this morning, would be right here. And you can see where I said, good morning, everyone. And you can see this is just the general chat room, one of 5. So you can see all the chatting that's happened just in the last hour and 15 minutes. And then that not to include trades, news and research, the Forex Flow room where Ryan's group came from. And then we have a Spanish chat room as well. So jump in the Forex Analytics chat. It's only $1 for 10 days. Try us out. Download the mobile app. Get the advanced analysis and the chat rooms for the next 10 days. So try us out, and then make sure you visit our webinar sponsors. Go visit Forest Park FX. We've been working with them for the last 5 years to connect you with brokers, the best FX broker out there. They'll find the best one that fits your trading style the best. So thanks for tuning in, everybody. Stick around because Dale's got a great interview today.
Just quickly, Blake.
No, you can't interrupt. I'm sorry. We're finished.
Too late.
I'm joking.
Go
ahead.
In the door. We'll be launching the monthly NFP competition today. So if you're not in the chat room and you want to chance your arm at winning a free month, keep an eye out for that on our Twitter stream and on our live news blog. Yeah,
so if you go to the news flow blog right here, which you can also, Ryan will be tweeting about it, but this is a lot of exclusive content that just comes through, he pulls a lot of information off his Bloomberg and everything else to give to our Forex Analytics subscribers. It's in the news flow here. But what he's talking about is we're giving away a free month of Forex Analytics for the non-farm payroll competition. So make sure it's easy. You just guess a number and guess opposite of whatever I guess, because I'm always wrong. So
yeah, wait for Blake to guess first.
Yeah, wait for me to make my guess first. Then you guys just guess a complete opposite of whatever I do. So all right, guys, good luck. Dale, have a great interview.
Thanks, Blake and Brian, Stell.
Cheers,
the power of community, Ryan, and the community has really grown stronger over the last several months. So thank you, guys. Thank you, team. Dan Weisskopf, welcome back to F.A.C.E. How are
Dale,
you, buddy?
Thanks for having me. And by the way, to your point, I love community, and we do a lot of spaces. We do a lot of interaction with folks just for the benefit of sharing insights. So you're so right. The market, my dad used to say, the market will make you humble. And it does.
Yeah. And, we only have 2 eyes, right, Dan?
Yeah, we only have 2 eyes. And 2
so,
ears.
You got some talented people with their eyes, and, you could understand the math, 1 + 1 = 11. So I'm so glad to have you back, Dan. I'm curious if you want to share your screen. Were there any charts or anything you brought, or I could go ahead and do it?
I didn't bring anything.
Okay. I'll do it.
My question to you then would be, tell me a little bit more about your audience. Obviously, it seems to me, because I've been listening, that they have a trading perspective.
Yes.
Is it day trading? Is it trend trading? I want to add some value. Obviously from a perspective, I am by background the portfolio manager or co-portfolio manager of the blockchain ETF.
Okay.
BLOK.
Right.
Happy to talk blockchain and crypto.
All right. Okay. We have crypto traders, everything on my screen, Dan, as far as time frames for holds of trades, that too is different. Most of this is leverage, so 2-3 day swings, sometimes 2-3 week positions. Probably nothing like, except I know there are some guys that do hold positions for months. So, and we look at everything, not just currencies. We look at the metals, and we look at commodities, and we look at crypto. And so we cover anything that moves, anything that has a chart, stocks as well. Follow that, different groups to give us market tells. Agricultural commodities, natural gas, everything. So you're in a very interesting field. What I want to ask you is a couple of things about crypto. And here's Dan's website. They're right there at all the major money centers, except Detroit really isn't one, but probably one of the founders lives there, is my guess, right?
It's funny you say that. So we just had a group meeting in Detroit, and we've got offices in Chicago, and
the city's coming back, though, isn't it? Detroit.
Yeah, Detroit's coming back. New York's coming back. U.S. is coming back. And globally, I think we'll get over this kind of hurdle. If you go to the amplify.com block website, it may be more helpful. Turoso, as a firm, manages about $8 billion in ETF money. The blockchain is about $1.7 billion of it. Turoso, what you're looking at as a website, is really, offering investment services to registered investment advisors. You'll see under products and services, that's like our SMA. I also am the lead ETF strategist for the ETF think tank, which offers services to financial advisors as well, tools, etc.
So nothing for the retail. It has to be an RIA that you mainly work with. You like, if I was interested in working with you, I'm really not one of your target markets of clients that you work with retail.
Dale, I'll take your money. Happy to manage it for you, but no, I think to your point, it's we really work with registered investment advisors.
Yeah, so I do see that you do have managed accounts, and that would be RIAs placing it with you, or individuals could place capital with you for your
both
manage. Okay, and your minimum for a managed.
$250,000. We really don't go below that.
All right. So, let's get back to your bailiwick and talk a little bit about cryptos here. What do you think of the, kind of the correlation that people are talking about doesn't always work, but when crypto is strong, precious metals are weak. When precious metals are strong, crypto is weak. Coincidental, or any reason for that relationship to exist, even though, like most correlations, they don't hook up all the time, but they seem to sometimes.
Yeah, it's a great question, and often, people are arguing back and forth between whether or not, Bitcoin or gold, which one to hold. And the
Yeah.
fact of the matter is, diversification is the answer. Holding both, I think, makes a whole lot of sense. If you want to broaden that out and just talk general metals, it doesn't surprise me that they, move differently. And by the way, for whatever it's worth, and I don't know that it's worth a whole lot, we're about 70% correlated to the price action in Bitcoin. We being Block. And that isn't coincidental, because it's, the way we've built it of late is that we're long a lot of the miners. Okay.
Yeah.
And that correlation is working in crypto or Bitcoin, particularly because they're holding the commodity, we'll say. If you're going to ask me whether or not Bitcoin is a store of value, it's a store of value in the same sense that Cisco might be a store of value, right? It's going to work well at times and work very poorly at other times. I'm not one of these, maximalists. I don't have anything in my eyes. I want to keep my eyes open so I can see the future.
So some of these, hold on for dear life for, $1 million.
No.
Guys like that. Do you have an explanation for, and I bet you do, what I've noticed, especially last couple of days, how Ethereum is outperforming Bitcoin, holding up better. Yesterday, Bitcoin was down and Ethereum was still higher on the day. Is there some big development happening that people are gravitating towards Ethereum? And do people trade these as pairs sometimes, like long Ethereum, short Bitcoin? They trade them that way?
I'm sure they do. I'm sure there are a lot of folks who are trading like that. It's not my thing. But to answer your question, they're different utility values, right? Ethereum has a different use case than Bitcoin. We're seeing a lot of money going into developing the Ethereum platform, right?
Okay.
And that's why it's going to work differently. There's probably going to be a point in time, frankly, where they're even less correlated than they currently are.
Okay. Switching gears a little bit, Dan, did Friday mean anything to you and your work? What are your thoughts, especially that it was happened on such a thin day? I know I didn't get up till 8 in the morning. I'm on the West Coast, so markets had been open for quite some time. I turned on my screen and said, wow, that kind of hit we took. And, besides the S&Ps, the big break that we had in energy, do you think that, are you seeing outflows, or is this, are you starting to see inflows? Because everyone loved the energy sector up here before this pullback. Are you seeing any flows? Do you have any energy ETFs at Taroso that you talk about and people participate in?
Specifically in the way of energy, I don't think I have a whole lot of comments. I mean, we saw positive flows in Block, and we saw we were net buyers in Block in terms of exposures. I specifically on that day, I mean, what a perfect storm, right?
Yeah.
Everybody's asleep at the wheel. Traders are not going to do anything on that day, not the big traders. And it does create great opportunities for a lot of folks. I'd love to, put some bids that are random on a day like a Friday end of month when everybody else is fat and happy on the holiday. But no, I thought it was a pretty quiet day.
What are flows like if you have a precious metal ETF that you sponsor? Do you have one?
We're involved in a couple of them. in the way of precious metals, I don't have any direct affiliation with GoAU, but that's probably my favorite one.
Okay.
And they're gold mining ETF, right? And the interesting part about them specifically is that they're not just the miners; they're also the royalty trust companies. So they're taking advantage of clipping the coupon while lending to the miners.
Oh, interesting. So there's a yield on it.
There isn't so much a yield on the ETF, but the business model of the royalty trust is working that way.
Okay.
And by the way, but just to help you out on that question, you might see a yield on it, but it was more like a cap gain.
Okay, and that was what again? AU?
GOAU.
Go AU. Almost a Go Arizona University. Yeah. So here it is. Okay. Take a look at it.
It might look like shit on a chart basis, but that shouldn't be a surprise.
Yeah, well, it'll be higher today because look at how gold held right where it had to. So, I think we're right on the,
that's interesting,
precipice of being good or bad from here for $150 or so. So here's just a quick look at gold. And this is, I think, the last rationalization that you're going to have. Oh, that's GDX, which looks kind of crummy, but
they look similar, by the way, from a chart perspective. Gold.
So this trend line, we held it yesterday. I still think that we could rally to 1820, but unless we close back above it, not real positive about it. This was a nice play. SCO took advantage of that $20 decline in the energy complex. Do you have anything strictly for volatility? Any ETF? Are there any ETFs? I know there's a lot of VIX products. Any VIX products that you know of that do not have a huge amount of decay in them when you buy them, like a VIX-E or any of those products that you like? Are there any volatility products that when you're thinking about that there's going to be a move involved that you might consider buying?
Not in that I can talk about on this call.
Okay.
Because I got to be careful on knowing my audience. And when you're talking about the VIX products, you nailed it right on the head, Dale. The decay is bad, right?
Yeah. And you can't position trade with those.
You cannot. You cannot.
I've tried it.
Yeah, and people don't understand.
You have to learn the hard way sometimes,
Yeah. My younger brother used to tell me on the leveraged products, and he's a trader as well. My dad was a trader, so he used to argue with me about how all the leveraged products are going to zero. Oh. And I'm like, yeah. Well, they might not go to zero. They're going to be bad. Don't get me wrong, but they'll just reverse split, so they won't go to zero.
One group that was so hot for such a long time and it's really fallen out of favor is the marijuana stocks. They still look, I have a real spec one up here, but even if you go to some of the other ones, do you think that it's going to take new federal legislation to get them moving again, so that they could be banked? Here's Tilray.
Yeah, I mean, I in the way of ETFs, I favor Charlie, Nancy, Boy, Sam in that space because it's actively managed. This space requires an expertise. I don't have that expertise.
Yeah. Because you could be right about the sector, and you have to do due diligence on the company and see what kind of debt they're holding, and you really have to be able to go into a balance sheet and understand it, right?
Well, you do, right? And it's kind of like the blockchain. In that you got to build a network around a thesis, right? And Tim Seymour knows the managements, so he's the guy who can answer your question better than I can. Because I don't know what's going on with Tilray, but you're right. I mean, at the end of the day, the banking system needs to align with the marijuana trend.
Okay, well, speaking about marijuana, don't smoke it in your EV, but the EV stocks have been really on fire. Where's the next Tesla? Seems to be the theme that's out there on the street. Are there any ETFs that cover, this new up and coming group?
Yep, there are about 4 or 5 of them. I lean towards CARS, KARS.
That's how I always spelled it, even in grammar school.
Yeah, I love it.
It wasn't the band spelled that way, CARS?
Yeah, no, they were CARS. I remember the band too, by the way, Dale. We're about the same age. I might have to play it.
All right, so here's CARS. I'm sure it's going to be a pretty bullish looking chart.
Of course. Yeah. It's 7% weighted to Tesla. Which is a reasonable allocation to me, right? It's got NIO in it, NIDEC as well, and of course, you gotta own Ford, GM, and what I call Chrysler. You can call it Daimler. I don't know, but we're both old timers, right? So we know it's really Chrysler.
So anyway, also with EVs, it's part of the green story. Solar actually has been acting good. Maybe some of the incentive comes out of solar if oil prices continue to drop. I would think, how about you, Dan, that $100 oil would be better for the green movement, and solar and wind and green energy, so that energy is so expensive that it's more than competitive with fossil fuels. Feel the same way?
Yeah, I feel the same way. But at the end of the day, we're going that way anyway, right? Whether it's $100 oil or $50 oil. I'm in the process of buying a car. Obviously, when I say process, it's process because it takes 3 months to get a car, right? These days.
I didn't know that. Yeah.
But to your point, I'm buying something that is not EV, right? And knowing that it's going to be antiquated in like 2 months or 2 years rather, or 3 years. And that sucks, right? It's not a whole lot of fun to invest, money like that.
Go with the hybrid.
Yeah.
You've
You've
done your research.
I got 2 kids, and quite honestly, I'm cheap. So
well, you know what they say, when you buy you go into a discount store and you buy something cheap, you know what happens? It breaks.
Yeah.
Right? Just like stocks. Oh, it's cheap, but then it breaks to new lows. So, I want to ask you something, because I think we're coming to a crossroads in the next couple months. We've had a real strong dollar, Dan. Everyone came in bearish dollar last year. And the dollar has had a big year. It's starting to get attention now because, we're reaching levels we haven't been in for a long time. But, it's just a narrative I'm starting to work with, is that I think that between here and maybe 98, max 100, that we're going to get a dollar high. So what groups have suffered the most, or have been poor performers with the dollar going up? Because, they used to say dollar going up was kind of like a wrecking ball to equities, but equities did just fine with a strong dollar this year. Multinationals underperforming during this year, 2021, because of headwinds of a stronger dollar, or it just brushed it aside?
Yeah. So, when I look at the dollar, I'm looking at UUP as an ETF.
Right, right.
As far as which industries will do badly with a strong dollar, I got to think through that a little bit.
Okay.
In the context of ETFs, and maybe I'll tweet an answer for you as ETF professor. I forgot to mention that I'm the ETF professor on Twitter.
Well, I've had professors in my lifetime. In fact, one of my college professors asked the class, which is worse, ignorance or apathy? And
Apathy.
I answered, I don't know, and I don't care.
Yeah. Okay.
And I got an A. So anyway, so it'd be interesting to know, because if we do get a turn in the dollar, and I'm not saying that there's not more left to the upside, usually the most dramatic part is near the end. But if we start having currency debasement, which might be the next step to make our huge debt load easier to carry, and also take pressure off of emerging markets that have all their debt denominated in dollars, that I'd be looking for. I mean, the obvious ones are, commodity related.
Sure.
It's not necessarily that negative for stocks because you have nominal gains, but I'd be looking for things that did not like a strong dollar, and it's probably multinationals and or U.S. companies that export that would rather have a weaker dollar. So just something I thought I'd bring up. How about the interest rate scenario here, Dan? ETFs, TLT and TBT, your main proxies for when you're looking at rates?
Yeah. No, I think that's right. And there, it's going to be very volatile. We also looking at the MOVE index as an indicator of that volatility. So, yeah.
Okay. So I mean, it's interesting. The 10-year has been had a little pullback, but it's acting pretty good. But the bonds look like they want to. I don't know how you justify. This. It's almost like people are buying bonds. Normally, during a tapering process, could the bond market be saying that there's a policy error with what the Fed is doing? And, the short end of the curve is, it's almost like they're moving in the same directions, but they mean opposite things. So you have the 10-year doing this, and you have the TLT, which with the 10-year going up last week, bonds are going up too. So we must have a flattening going on here.
Dale, you're addressing one of the biggest challenges for the financial advisor community, right? People are expecting fixed income to provide safety.
Yeah.
But what we find is a lot of advisors are using, and I think it's the right answer, using fixed income as a protection to their portfolio. Which forces them to trade, right? And because fixed income is no longer that safety net like it used to be. When the shit hits the fan, fixed income is going to be the indicator, right? And people are going to be shocked if they're overweighted fixed income. It's going to be scary for a lot of retirement people.
That's the biggest bubble out there. I mean, when I think about it, Dan, and tell me what you think. You think about a lot of these companies, especially like airlines, that they went to the corporate debt market and they didn't build new planes or hire more people. They use that the proceeds from the debt to for financial engineering, for stock buybacks and paying out dividends. And then when the virus hit, they had nothing saved for a rainy day. When corporations do that, aren't they really, because they're borrowing money to do this for buyback programs, actually have a margin account on their own company?
You threw a lot at me on that.
Yeah.
I've been long Cisco for about 20 years, and
Okay.
I'm angered by the irresponsibility by the management, just sitting there as an ATM buying back their stock. Right. My answer was they should have been buying Bitcoin and moving forward, innovating. I think if a company just buys back its stock, especially if it's doing through leverage, it's just dopey. It's just protecting their careers,
Their interest in how they get paid with stock options, etc.
Yeah, it's bad.
Yeah.
It's bad.
Yeah. All right. Well, Dan, appreciate you going around the board with me, and best way for people to follow you and get a hold of you, they could always go to your website. You have some nice news stories here on resources, I noticed. So, people could go there, or they could find you on Twitter at the
ETF Professor.
at ETF Professor.
Yep.
Correct, Dan?
That is correct. ETF Professor.
Well, Dan, thanks so much for coming here and bantering with me for about 30 minutes. I appreciate it. And I'm a trader of ETFs. I think they're a great alternative for people that, do not want to trade futures or individual stocks. And I've heard so many horror stories like you were talking about where, someone may have liked silver and bought the wrong silver company instead of going to an ETF. I've done that before, and they really do not eliminate the risk of you being wrong about a sector, but eliminate the risk if you're not real good at due diligence on reading about the financials of a company and what could happen to one company. You could have a company, a miner in a country where things become unstable and people worry about nationalization. So,
Absolutely.
Like the product, and appreciate you, Dan. Thanks very much, and I hope you have a great fall trading season. And I'll reach out to you so we could do this again next time.
Thanks very much, Dale. Be well.
Hold on. You know what, Dan? I got a bunch of questions I was ignoring. Let's see. I think your guest handle. Yeah. Okay. Anyway, good response from attendees, and appreciate you being here very much.
Excellent.
So,
Be well. Tell anybody they can shoot me questions. DM me on on Twitter. ETF Professor. Thanks a bunch,
Dan. Everyone, Dan Weisskopf, giving spirit, sharing his knowledge with us today. Remember, don't just count your ETFs, count your blessings, and we'll see everyone tomorrow. You could join the team in 13 minutes for the morning edge. Adios. Thanks, Dan. You're welcome, Brock, Ingmar.